are. Let's see if if internet wants to work now. Holy moly, what a day. What a day, let me tell you. Not one of the best days, but we also survived the not as good days, right? So, yo, what's up, everyone? Yeah, so this afternoon we had some internet troubles, and I got in touch with the internet provider. They tested the router, and apparently the signal coming in is good, but there's something with the signal going out. So what they're going to do now is they are sending me a 25-meter long cable so that I can connect my laptop straight to the router, or like the Wi-Fi point, like all the way downstairs, so I can have a straight line from that to my laptop, which should increase stability and make the stream more smooth, and also just have less problems with internet. Now, we don't often have problems, honestly. Yes, like today was the first time we actually couldn't pull through with a live stream. So if it only happens once a year, no problem, but I still want to fix the problem. So yeah, they're gonna give me a longer cable, and other than that, everything else is the same. But here we are now. The connection seems stable and we're good. So took a lot of time though, but here we are. Andy, welcome. Hiop, Hamza going for a run. Enjoy your run while listening. Enjoy, man. Kiwi, how you doing? Did you watch WWDC? I didn't. I also honestly wouldn't know what this is. Interesting. Lucian, what's up? Daniel, how you doing? Stego, what's up? All of the AI features. Less lag, hopefully. Less lag indeed. That's the aim. Okay, so as we are live right now, let's go into and get into Elliott Waves, shall we? Biscu, how you doing? Welcome. Good to have you here. Rostam, Sibel, Parames, Darpan. Holy moly, everyone coming in. What's up, everyone? Good to have you here. Y'all shop. Welcome, guys. Welcome. I'm happy to see you after the problems we had earlier today. Rob, what's up? So, what we're going to do is, of course, cover Elliott Waves in the live stream. It won't be too long of a live stream because it is already late, 9:15 now here in the Netherlands, and I have basically been problem solving the whole day. So since the live stream didn't work earlier this afternoon, I've been in touch with support, and then somehow the whole Wi-Fi network was gone, so I had to remake the network and reinstall the different Wi-Fi points we have here as well. And now finally everything is up and I can actually do a live stream. So it won't be too long, but we're still here. We can chat, we can watch the charts, a little bit of analysis, of course, as always, and do some good stuff. So good to have you here. Konstantin, good evening. Adi, what's up? Tuti, Dara, Kiwi, morning for you, exactly. What is it, like 7 a.m.? Glad you fixed it for now. Yeah, but I'm happy. It still gives me the warning that the stream's current bitrate is lower than they want. Not sure, we'll see. But I don't have any notification in OBS that I'm missing or dropping frames. So, please just be stable now. And I get an internet cable of 25 meters, so I can connect my laptop straight to the router. Through the whole house, boom, instead of connecting it to the Wi-Fi points. And all the Wi-Fi points are cabled with one another. It's just that my laptop is connected to the closest Wi-Fi point and not to the router. I don't have a cable that's that long. Of course I could buy one, but now they're giving me one, so hey, okay, so what are we gonna do? Of course, we had a little bit of movement, very, very locally. And I do think it might be interesting. I have 3 groups. I want to talk about these 3. This is very low time frame stuff that I have here. So I'm gonna remove this. I do want to, no, actually, let me, I want to talk about that. So gonna keep that, and remove that because that's covered in the groups. Okay. So I'm gonna start and we're gonna do a quick like whole recap. You guys want a complete recap quickly through the weekly, daily, and you know, tuck tuck tuck, and a local price section? I mean, yeah, okay, let's do that. Where is my macro bull? There we go. Nope. Nope. Not yet. I am going to talk about this. And just because we want to be complete, I'm actually going to talk about these as well. So yeah, okay, we're just gonna cover the whole shebang. Now, in the live streams, I generally talk about a few more scenarios compared to the videos, and the reason is that I can explain more. This one is not relevant yet. Low probabilities hit the 886, rare for wave 2. So low probabilities, you're gonna move all the way down. So in a wave 3, if you do move down, higher probabilities for a C or a Y. So at the moment, not the highest probability. Doesn't really, not great value in explaining this. So, of course, at the end, we will cover the probabilities of the different scenarios, right? As always. So the probabilities on the weekly, the daily, the 4 hour, 1 hour, 15, or, you know, something like that. So that is what we're going to do. So we will quite quickly, though, go through the scenarios because I just want to explain why a scenario has a higher or lower probability. So first we cover the whys, and then we talk about the final probabilities. The lower time frames will be covered basically in a, like, you know, in a nutshell. You can have a flat here, A, B, C, look for proof of support for then a wave 1, 2, 3, or a bigger A, B, C, but actually hit the target box that we still didn't hit so far locally. A 1, 2, or a wave A, B, C was an option, but then in C you had a 1, 2, 3, 4, 5, 4 retrace too deep, so that's invalidated now. Same with this being a 1, 2, looking for a 3, 4, 5. So lower probabilities, maybe yeah. This now is very much a 3-wave structure to the upside. So you could have an A, B, C in here and then look for a 5-wave structure down. But we're going to cover that. We're going to get there. Do you consider left or right translated cycles? I don't actually consider cycles at all. I use time, yes. So I guess cycles equals time. So I do use time in my analysis, but I don't actually use the word cycles. I just use the word time, comparing the bull markets, comparing the bear markets with one another in time, and use time as a factor in probabilities. Okay, let's start. And let's see, 14 minutes. Good to know. Let's start once the clock hits 15, 20 seconds. Yes, Kiwi, I do use time. I'll make sure to check out the recent macro live video here, and you will see how I use time on the monthly chart as well. For everyone that's new, hey, complete new playlist here. Everything you need to know about Elliott Waves, full educational, everything in there. FIP, the targets, the FIPs, the volume, FIP time, examples, tips, the whole shebang. Everything you need to know about Elliott Waves is in that playlist. And there will be some more videos coming, but that's just side quests if you're a gamer. Okay, let's start. Okay, on the weekly time frame. Now, of course, for the ones that have been around, you kind of know what's coming here, so I won't stick to around too long on the higher time frames. But on the weekly time frame, the highest probability is this impulse to the upside, unless price is going to hit 49.3k before taking out this high. Lower probabilities at the moment. So we're looking for a 1, 2, 3, 4, 5. Inside wave 3, we then have an internal green count. 1, 2, 3, 4, 5. What's up, Adam? Welcome back. And here, possibly your 4 is in. You look for a 5 to the upside. Now, the target area for 5 is the green box here. The 1.236 is 78.6k to 110.6k. That's, of course, a very wide area. And therefore, counting the lower time frames is going to decrease the size of our target area, because this is your weekly target area on the weekly chart. But based on the lower time frame counts, we will eventually have a daily target area, right? Which is going to be a bit smaller. And then we have a 4-hour target area, and then a 1-hour target area, and then a 50-minute target area. And we can get more and more precise. But at the moment, this is the area that we're looking for. After wave 3 is in, we look for a sideways 4 and a 5. Now, in the rule of alternation, or at least talking about the rule of alternation, because your wave 2 is a longer sideways shallow corrective structure, this wave 4 does have a higher probability of being a short and deep corrective structure. So actually, if I want to be really correct, the probabilities would be higher to look for a deeper structure down back into the range of the previous wave 4. Yes, for God's sake, hopefully we're not going to stick around that long again over here. But then you want to move, right? So wave 4, higher probability, because wave 2 is sideways and shallow. Wave 4 has a higher probability of being deep, right, and short in time. And the wave 4 of a higher degree likes to retrace to the wave 4 of a lower degree, which is the price action here between 73k or 74 to 56k, right? That's going to be important support. It's not a rule that a wave 4 of a higher degree retraces to the range. It's more like a guideline. It is something that does happen on the chart quite often, as you will see with your Elliott Wave counting. Locally, if the low is in, there is 2 main bullish structures. And this one on the chart does not really have the highest probability, but I still want to talk about it, because what lowers the probabilities here is your wave 5. So what we're looking for is a 1, 2, 3, 4, 5, and your wave 5 is extended. So wave 5 is the longest, strongest, most impulsive wave with then an internal big 1, 2, 3, 4, 5. Target 1.618, 91.3k. But an extended wave 5 is rare compared to an extended wave 3. Most commonly, your wave 3 is the longest, strongest, and most impulsive wave. But in this case, it is not. And because your wave 1 and your wave 3 are quite similar in price, it at least gives the opportunity to wave 5 to be extended, but it remains something that's rare, something you don't see very often. Now the invalidation here is the low, 66.6k, and you do want to take out that high at 73.8k, right? You want to see continuation to the upside. Alternatively, we're looking for a couple 1-2s here. 1, 2, 1, 2, and maybe on the lower time frames more 1-2s, right? Doesn't really matter, because on the higher time frame here on the daily, we're simply looking for price to move up. But here we still have our wave 3 coming, right? So we have a 1, 2, 1, 2. We still look for wave 3 to come to the upside, and then eventually get a couple of 4, 5s to end the impulse and go into a bigger range, right? Because this wave 5 then ends the yellow weekly time frame 3. And then we look for the yellow 4 before we move up in the yellow 5. We're going to talk probabilities at the end. Arguably a bearish scenario here, but still bullish, would be a finished 1-2 continuation up in a 3. Now, target area for your 2 is on the chart, the green box, right? 64.3k, 59.8k. 382. Uncommon, 886, very rare for a wave 2. What does lower the probabilities for this scenario compared to the other 2 meaning at the moment this one has lower probabilities than this one with an extended 5 and a double 1, 2. And the reason is your wave 1. So inside wave 1, we of course want to count an impulse. 1, 2, 3, 4, 5. However, your wave 4 is very short in time compared to your wave 2, which lowers the probabilities, as by far most commonly a wave 4 is longer in time than a wave 2. But also your wave 2 is very shallow. It didn't hit the 0.236 of Fibonacci taken from the low of 2, 1, 2, 3 to the high of 3. And that is regarded as a minimum target. Not touching the 0.236 is rare for a wave 4. Right? It's very unlikely that that happens. So it does lower the probabilities for this scenario. Doesn't mean you can't go down, but it means that if you do, other scenarios will likely have higher probabilities. Now, talking about more bearish scenarios, I want to quickly cover the WXY because I got a question about it today. That's the only reason it's on my chart. So someone said, good, can we still look for a flat here in wave Y? Right? That was the question. Now let me cover this scenario and what we're looking at. So we have a wave W, regular flat. Then we have a wave X, expanding flat. If you know an expanding flat, you will also know why wave C and X has a lower probability. I just explained. And then you're looking for a wave Y. Now inside that wave X, to cover this, we are looking for an ABC. Wave C has to be a 5-wave structure, meaning this has to be a 1, 2, 3, 4, 5. But I just explained about wave 4 being very shallow, very short in time. Lowers the probabilities for this to be a single impulsive move to the upside, which automatically lowers the probabilities for this scenario as well. Now let me actually take this off because it's irrelevant. So because wave W is a flat, wave Y can be a zigzag, ABC, can be a flat, ABC, which would of course be insane, or a triangle, a bigger triangle. So A, B, C, D, E, and a triangle, too early to call, and local price action at the moment, it's not really something we're looking for. So that leaves the zigzag or the flat in a Y. Zigzag would be a 535. On the lower time frames, this move down, right, is a 5-wave structure. Can we count one? I mean, yeah, we can count. So not is a 5-wave structure, but we can count one. The thing is that if you do, your wave 5 is the extended and longest move. Lowers the probabilities, this is an impulse, right? Increases probabilities, this is a 3-wave structure, and that has already been proven because on some charts the high is taken, which is not allowed in a zigzag for a wave ABC. On some charts the high here took the one on the left. So a zigzag is therefore invalidated. This leaves us with a flat. And a flat would then be 3-wave A, 3-wave B, and you look for a 5-wave C to the downside inside the target area for your wave Y, 63.2, 54.3K. Now that means that we are looking for a 3, and then a 5-wave structure. In other words, 3, 3, and we want to see a 5-wave move. However, if this is the high of your A, B, C, 1 second, because I do have this actually somewhere. There we go. If that's the high of your wave B, then your wave B is a regular flat. 0.9 to the 105 fib from the high to the low of A is a wave B regular flat target. A regular flat is uncommon compared to an expanding flat, and the expanding flat target is up here. So we do keep that in mind with the probabilities. Now if the high of your B is already in, we want to count an impulsive move down, which is a 5-wave structure. 1, 2, 3, 4, and a 5-wave move going below your wave A at 66.2K. Now that means that on the 1 hour time frame, we need a wave 1, 2, 3, 4, 5. I've covered this in the video this morning as well. And you don't need to know anything about time. But if you know a little bit about Elliott waves, you will know that the ratio of the waves is important. How waves are related to one another in size, right? On a weekly time frame, you can have a wave 1, 2, and a 3, 4, 5. You're not going to compare a weekly wave 4, right, with a daily wave 2, a 1, 2, 3, 4, 5. This compared to a weekly, so you go up in a time frame, it's another structure, it's not related. So this long range on a weekly time frame is not related to your wave 2 of a daily time frame or a 4-hour time frame or even a 50-minute time frame, right? Because the structure here would be so big compared to your small little wave 2 here on a 15 or 1 hour or 4-hour time frame, it doesn't make sense anymore. So you're going to go up in time frame, and this is then going to be a wave 4 of a weekly wave 2 as an example. Now, when we look at this structure here, just look at the size of this thing compared to this wave 2 here. Doesn't really look like a wave 4 anymore. Can we agree? Right? Lowers the probabilities. I mean, we can never invalidate it fully, right? Unless price hits the 618. I'm actually curious if it did. I didn't have an alarm. Did it hit 70 point? No, not yet. Oh, wait, I have to pull it lower. Not yet. So almost invalidated as well from a fib perspective. But from a time perspective, this is so long compared to 2, lowers the probabilities. This is an impulse to the downside. Now that automatically lowers the probabilities that we are looking for a wave C, which therefore automatically decreases the probabilities that you're looking for a wave Y in a finished ABC flat, or at least a finished wave B of a flat. So in other words, if price does move down, higher probability, we're looking at something else and not a flat here, because of the local structure that we have at the moment, right? So for a flat, preferably, you're going to take this high, you move your B up here, and then move down. Now that does mean that your wave B is going to be incredibly long compared to your wave A, so then time between A and B is going to be a bit of an issue again. So we're going to keep an eye on it. Interesting, no? Gotta love Elliott waves, how everything comes together. The 535, well, that's the one you're looking at here. So, 535, the zigzag, all right? Target for your wave C in a zigzag ABC is the 1 to the 1.236 most commonly. 54.6, 50.5. The 1.618 is an extension target, bit less common, 43.9. Now, we don't want to go there, by the way. Here we have a leading diagonal in a wave A, B, C, B, move down in C. However, we can't finish our wave B here at the high. Reason is that this high has been taken on several exchanges, including the index chart. If this is the high of your B and you look for C down, you need to count a wave 1, 2, 3, 4, 5. But wave 2 went above the high of 1, invalidates this high to be the high of B, which therefore means that this wave B has to move to the right. It can't yet go anywhere else. It has to be this high if we are looking for a wave C to the downside here. Now that means that somehow we then need to end a 3-wave corrective structure in wave B according to the rules. Zigzag A, B, C, that looked nice, but having an A, B, and then 1, 2, 3, 4, 5, look at the size of your 4 compared to your 1 candle 2, doesn't look amazing. No? Let's go down in time frame, go to the 6 hour here. So we have our 1, 2 here. Now for the say up. You know, your wave 4 is a lot longer than your wave 2, so that's not really ideal. Now besides a zigzag, right? ABC, okay, not really cool. Okay, WXY, a double zigzag. Well, your wave Y is very short. If you take a trend-based fib from the low to the high, even to the lowest point here, this high did not take the 0.618 or hit the 0.618. So that decreases probabilities. As for a wave Y, that would be a minimum target. Right? Decreases probabilities as well. And then finally, same with the flat. if this is the high of your B and you look for a C down, we need to count an impulse on the 1 hour 50-minute time frame. But the current range that we have here is so long for a wave 4 compared to your move down, it lowers the probabilities. It is a wave 4 in an impulse to the downside 1, 2, 3, 4, 5. Now, unless somehow you have a finished impulse here to then count a wave 1, 2, 3, besides, by the way, your wave 2 is then still incredibly long. Let me also show that. Take a trend-based fib from the high to the low, you double click. We are talking about your wave 2 being, what, like 10 times longer now? Let's have a look here. Even more. Oh, what? 12 to 13 times longer. So if this is a wave 1 and this is your 2, your wave 2 is 13 times longer than your wave 1. Lowers the probabilities that it is a wave 2. That would be incredibly rare for a wave 2 to happen. So therefore, if price moves down, probabilities are higher, it's something else compared to an impulse 1, 2, 3. But the probabilities are also lower. This is a wave 4 compared to your wave 2. Probabilities are higher. This is a completely new structure, not related to the move down at the moment. But more about that in a second. So because of the start to the downside, the probabilities for a zigzag bigger on the daily to lower targets has also been reduced. Coffeeholic, I'm happy to see you made good use of it, and it is a pleasure. If you don't know what Coffeeholic is talking about, check out the playlist here. If you go to playlist, right, full, it's a full everything you need to know about Elliott Waves with examples, the whole shebang, everything is in here. So now locally, if we then zoom in to the lower time frames, right, your most bullish scenario is that we made a low and we're looking for a wave 1. We don't really have to know how things ended here or how we count this in detail now. The only thing we need to focus on is this part of the chart. Because if we do look for price to move up, then on a daily time frame, we're looking for either a wave 5, right, which then likely is going to be extended, and if not, right, that's okay, but then we look for resistance, perfectly fine, or an extended wave 3. Doesn't really matter. We look for price to reach all-time high, and then we take it from there. We look at the structures, look at the volume, look at the waves that are going to be formed. It doesn't really matter what bullish structure we'll look at, we just keep observing the lower time frames and keep counting the waves. However, locally, you have your impulse, and then you look for a wave 2, and eventually a wave 3 to the upside. So, answer the questions in a second. So here, your impulse is then a 1, 2, you look for continuation up. Now your wave 1 here is positioned on this high. And the reason it has to be on this high is because of the 3-wave nature of the move down, very much looking like a zigzag. If we are looking for a flat in an A, B, C, wave C has to be a 5-wave structure. But on the lower time frames, we never really got a 4 and a 5, right? We got a 1, 2, 3, 4, 5. Highest amount of volume in 3, okay, that's perfect. But we never made a range and another low on lower volume for a wave 4 and a 5. So it lowers the probabilities for this to be an impulse to the downside. Therefore, it decreases probabilities for a flat ABC. Therefore, I can't really put wave 1 here because the probabilities are lower that this is the end of 1. Right? Now, if this was the end of 1, you could count this as the end of a triangle over here. And then have a 1, 2, 3, 4, 5 potential. But because this wave 1 would need to move to the high to the right, we now cannot count this as the end of a triangle for a 1, 2, 3, 4, 5. Reason is overlap between the high of 1 and the low of 4. Right? And that's not allowed in an impulse because then we have to think about double 1, 2s, which doesn't make sense because we went down, or a diagonal. But a diagonal also doesn't make sense because 3 is longer than 1 but 5 is shorter than 3. It's not allowed. So therefore, this range here has to be counted differently. And in a bullish scenario, you're going to have some 1-2s in here where this is simply your latest 1, your latest 2, and you look for price to move up impulsively. Right? So that is what we have on the chart here. So now I explained where the 1 comes from. So common target for your wave 2 is the 05 to the 786. The 618 and the 786 are on my chart because we already touched the 618. 68.6k, 67.7k. Taken from the low to the high. Cool. We also had some additional support here. Remember the target box that we had here? We were live on stream when price was up here. The probabilities were higher to move to the downside on Friday the 7th of June. You can check that stream out if you like to, and I'll explain in that stream why that was the case. So we moved to the downside. Well, we never really know how quickly we do. We only expect a retracement, but when it happens, we'll see. But it happened very quick. We had a box here. We said, well, there's not much support here, right? If price goes down, the first area of support would be the box that we had, which was the point of control, the value area low, and the golden pocket combined at one area. We found support. The 886 is rare, invalidation is the low. Now this move is very short in time, right? Your wave 1 compared to your wave 2. It's not uncommon, let's say, or it's not, I should say this differently. It is uncommon for a wave 2 to be shorter than the 0.382 fib time, right, on the chart here, to finish a wave 2 here compared to wave 1. However, a wave 2 is most commonly the shortest corrective structure compared to a wave 4. So it is something that we have to keep in mind. Right? And after 2, we look for 3 to the upside. Easy invalidation. Easy invalidation. 66.6k. Take this low, and probabilities are higher. We're going to have a deeper dip to the downside. For the people that watch Trackmania, deep dip has been finished by Bren, by the way. I don't know if anyone does, but I used to be a professional esports player in Trackmania. Now, inside your wave 2, so if we zoom in to wave 2, right? A corrective structure that can extend wave 2 in time to end at a later stage is a WXY. Zigzag X and then look for a wave Y. However, your wave X is already, what was it? 10, 11, 12 times longer than your wave W. Can happen with a wave X, but it is very long for a wave X, even for a wave X. So the probabilities do go down that this structure is related to what you see on the chart here. In this case, for a bigger WXY and a move up. Now we do have some interesting support as well as resistance. To the upside, 70.8 to 71k, and to the downside, we have 67.6 to 67.8k. Remember, we already hit the target box I had here. That's the reason it's removed. Right? So we already bounced on top of support. We don't have to come back down, but at least we know the area of support if it does. Most bearish scenario would be an impulse, but I already explained why this wave 4 doesn't look too great, so I actually don't want to talk about it. Okay, so now we go to the lower time frames, and then I talk about probabilities on all the different structures. So price move down. So this scenario is, as I have it on the chart, invalidated. But what we were looking for was a ABC. Now an ABC would be bearish, of course, or you're going to be looking for diagonals. But I just had it on the chart for the sake of having it on the chart. A, B, and then a wave is C to the upside. 1, 2, 3, 4, 5 wave structure. Support resistance area on the chart where we find resistance at the moment. And you would then be looking for a 5 wave structure. But a 0.618 touch is an invalidation for a wave 4 taken from the low of 2 to the high of 3. We touched the 0.618. Meaning a 1, 2, 3, 4, 5 is gone. which also means that the most bullish scenario would be a double 1-2 here. Your bearish scenario is going to be a flat to then continue up. Now it has to be said, now we already spoke about time, so I can remove this. It has to be said that your wave B is very shallow, and I will talk about that in this scenario here because it's the same. So remember this wave B, right? And what I mean by shallow is if you compare your A, preferably ending here, compared to your B, your wave B did not even hit the 0.382. Nowhere. Also not with the lows that we have over here, right? So that's what I meant with probabilities throughout the range here is the probabilities are highest for price to at least touch this range, either for a wave B, for a wave X, for a wave 2, I don't care. But it is very rare for a structure to not at least touch the 0.382, A, B, C, W, X, Y, 1, 2, 3. You would like to see price at least touch the 382. It's rare, it's not impossible, but it is very uncommon it does not. Right? Now talking about the second scenario, if we move wave A or wave 1 from this high to this high, then the lows here did touch the 382. Of course, I have something to say about it. Oh, we did. But that does mean that we then need to count this structure to the upside as either a wave 1, wave A, or a wave W. And a wave W for a double zigzag in a WXY, that is, which would be bearish. Ending a structure here as a wave A or wave 1 is very difficult because we need a 5-wave structure. Now there's a lot of overlap here, so you need to think about diagonals. Right, where you then have a 1, a 2, a 3, 4, and a 5. That is not a great diagonal. We can't really end it here as well, honestly. But it isn't that great because your wave 1 by itself very much looks like a diagonal with all of the overlap that is here. And having a diagonal inside a diagonal, I mean, yeah, it's very low probabilities that happens. So preferably your wave 1 goes here, but then we know wave 2 didn't touch the 382, neither did wave B. So it's something that we keep in mind as well. But by all means, if this is the low of your 2, you look for a 3 up. 1, 2, 3, 4, 5 is invalidated because wave 4 went too deep, as we know. So the only bullish scenario here, in that case, would then be a 1, 2, 1, 2 continuation up. But your second wave 1 is quite long compared to your first wave 1. Lowers the probability slightly, but I do think, do we have bullish CVD? No, let me double check here. We do. Okay, cool. Because I thought I saw it, but I want to be sure. So we do have some bullish CVDs with the previous lows. Higher low in price, lower low on the yellow line. So that is at least a bullish CVD divergence, which could support a move to the upside. But because your second leg up here is longer in price and time than the first leg, it does lower the probabilities a bit for a double 1-2. Right? Still keeping an eye on the target area below in case we do come down. And then finally, you have the flat, a 3-wave structure, right? Your wave A, 3-wave in B, 5-wave move down in C. In that case, we want to count an impulse to the downside. So the moment a impulse here is invalidated, we're going to look for price to take out the highs. This is 5-minute counting. Honestly, I'm never really a fan of 5-minute counting. But yeah, you then need to count a 1, a 2, and you're going to be looking for a 3 to the downside, right? If price is, let's say if price is changing market structure here and taking out 69.9, probabilities will increase to take the highs as well. Volume has been increasing as price has been moving to the downside, at least with the latest low. So the highest the volume in the move down here on a 5-minute time frame is currently in the low. So therefore, preferably, you're looking at this to be a wave 3 still. Now, because we have overlap here, 1, 2, 3, 4, 5 is not possible. So you need to think about 1, 2, 1, 2, and then a bigger 3 still, potential. But here we have a flat. And actually, the flat is the only scenario that is still going to get your, price inside the target area. And then it's about observing the reaction and look for proof of support. I don't YOLO, don't FOMO, don't catch knives. I wait patiently for price to show me what it wants to do, and then I act. But at least I know my area of interest. If price does come down, and if I see what I want to see, I might get interested, no? And if I don't see what I want to see, well, we're going to look for a move to the downside, no problem. We know the invalidation as well for a bigger 1, 2. No? All right, we had some bearish CVD. Okay, so many scenarios, a lot has been covered. So let's then talk about probabilities. From an Elliott Wave point of view. Because personally, we should not care if price goes to 100K or 10K. If you're a day trader, it doesn't matter, right? What matters are the movements locally, the percentages. So therefore, your bias can be neutral and you just trade probabilities, either up or down. Now, on the weekly time frame, probabilities are highest for the bullish scenario. Until 49.3K is touched, the probabilities are higher to look for your wave 3, then a 4, and then a 5 towards the upside, still looking for 2 more pushes on the weekly time frame. Okay, going to the daily. Now, as explained, on the daily time frame, an extended wave 5 is rare. A double 1, 2 has potential, right? And this being a whole wave 1, it's not too great, not gonna lie. So arguably, your double 1, 2 has some better papers at the moment compared to the other 2 scenarios. Compared to the extended 5 or the bearish scenario in the 1, 2. We're prepared in case it does come down, but it just doesn't have the highest probabilities compared to the bullish scenarios. Now, the moment price would move up, as on the weekly time frame, we are looking for price to sooner or later take the high. So if we do, we can observe how price moves up. What's the volume? What's the structure? What are the waves on the lower time frames? And then based on that, we can get a better idea of what this structure was in hindsight. 1, 2, 1, 2, 1, 2, 3, 4, 5, right? We'll see. Or maybe even that bearish scenario, 1, 2, and down. We'll see. So the bullish scenario on the daily, as it stands, has a higher probability. Now the probabilities switch the moment you take out the lows here. So 66.6K is an important invalidation for the bullish scenarios. Because for this, it invalidates you. If your wave 4 is in, which kind of is the case here, then you're looking for 5 up. You don't want to take this low. And in the multi 1, 2, preferably, your wave 2 here is already in. You look for price to move up. So that's a very invalidation, right? And it's important to know where you're wrong. And then it gives us an opportunity to look for new potential Elliott Wave setups as well. Arguably, knowing where you're wrong is one of the most important things in trading. Having your stop loss, it avoids emotion as well. Clear invalidations helps with emotional stability in trading as well. So that is an important level, 66.6K, easy risk management. Take this low, we're going to look for lower, and arguably we're going to have a potential better entry for an even bigger swing trade to the upside. No problem, right? We can't win 100% of the trades, but the probabilities aren't yet highest. for a bearish scenario at the moment, also based on the local structures that we see. Now this one, low probabilities, and the ABC at the moment also low probabilities based on the local structure. So in other words, the bullish scenarios do have a higher probability, where the probabilities are low, to take this low at 56. All right. All right. Yeah. So locally, the probabilities at the moment are highest for this structure to be a three-wave move and not an impulse to the downside. Now, a three-wave move can still turn bearish for a WXY double zigzag, right? A WXY sideways double combo, or even a diagonal. 1, 2, 3, 4, 5, and then retrace and continue. It just doesn't have the highest probabilities to look for a diagonal here. Probabilities are at the moment highest for an ABC, which would increase the probabilities to look for the high before the low. I've clearly explained why that is the case. It's in the end all probabilities. A nice move down, by the way, as well after a double 1-2. So we might get a bit of a move to the downside. See if we can reach either that target box that I've been talking about for literally the whole range, or maybe even lower support at the 786. But this structure down does look better, right, as a three-wave structure. Difficult to count a nice impulse in here, because where's your wave 4? It's all probabilities, and that's the only thing we can trade. But that increases probabilities automatically to look for the high first before the low. Now we know that 66.6k is important from a daily perspective. So this again is a very clear invalidation. Take 66.6k and we can expect lower prices. And then so we have the WXY, the 4 low probabilities. WXY arguably has higher probabilities than the wave 4. And then on the lower time frame, since price has been ranging here, we have been looking for price to move into this box. As explained earlier, so far we haven't. And it is very rare for structures to not at least touch the 382. So naturally, I'm still looking for price to touch the damn box. Like, just hit it, you know? And then it gives me an opportunity to assess what price does. Proof of support. Now, this is different for everyone. You know what I like to look for, most of you at least, right? So let's see, can we get a potential market structure change? A bit of a grind and some bullish CVDs. Maybe you use RSI, money flow indicator, MACD, whatever, some random indicator, right? If that indicator shows you certain signs that allow you to be confident in a potential long, take the long. If not, and price comes down in a high amount of volume, and there's literally no support, volume is increasing, right? Which it is at the moment. If price moves down on increasing volume, the best tip from an Elliott Wave point of view is always to wait for a range to form. So if we get a bigger candle down inside this area, I just wait, right? And maybe I have to wait till tomorrow when I wake up, and then we'll see where price is, because it's already 10 p.m. here, so it's very unlikely I'm going to do anything in this area, because for me personally, I'm a very patient trader. I need to wait a couple of hours minimum to take a decision. So area of interest, yes, but then we'll see, right? So I do think a flat ABC here is a very interesting scenario. Quite difficult to count wave A, because if this is your first structure up and you look for a second, look how long your second structure is compared to your first. Oh, lowers the probabilities again, no? So 1, to continue? Possibly. There's a lot of liquidity, couple of lows here as well. That's quite interesting. And if price does not make it down here, but instead high volume, we start to range locally, grinding up, market structure changes, moving up above 69.9k, bullish CVD divergences locally. I mean, of course I'm not going to wait for price to then come back down. If there are signs of strength, sure, I'm interested to look for price to move up, and then I know my resistance area where I can then observe what price does there. No? So I know my areas of interest. I know where I'm interested to look for positions, and I either get what I want or not. But that depends on the reaction. So if my area of interest is hit, it doesn't mean I take a trade. It just means I observe for a potential trade. No? So we'll wait and see what we get locally. However, that is very local, low time frame price action. So you know the probabilities now for each time frame. 66.6k is a very important horizontal level, as it invalidates most of the bullish scenarios, and you can expect a bit of a deeper retracement. We also don't have a lot of support down here. First area 65.1 to 65.3k. Down there we go to pretty much 62.9, 63k, and then we're back down in the 50s, no? Level by level. But it all starts with 66.6. As long as you did not tackle this low, the bulls do have a higher probability for now. And we continue to observe the local price action, right? Higher probability for a 3-waver. No problem. I know my area of interest. I know an area of interest. Know an area of interest. I know my area of interest. See? And then I just wait for price to show me something. And then we take it from there. So, there you go. That is Elliott Waves on Bitcoin in a nutshell. Nutshell, if you were here since the beginning, it was still an analysis of about 40 minutes. So, there you go. You did well. And also, Yao Shop, welcome back to silver. Yao Shop, please send me an email to koenztrading@outlook.com, right? So koenztrading@outlook.com with your Discord, Telegram, and YouTube username, and then I will get you sorted, okay? But welcome back to the team, man. Mogandusi, how you doing? Are you a regular now, once again? Good to have you, man. 66.5. I mean, we spoke about the probabilities. The 66.5 is of course below the lows, so you need to take the lows first. And that means you need 66. If you hit 66.5k, wait. Yeah, that is the low of the range. I mean, yeah, we spoke about it. So the probabilities are at the moment lower compared to taking the high. It doesn't mean it is not possible, but this is also risk management. So you don't have to be, so if one trades, whatever your strategy is, if you trade, you will never have 100% win rate. The probabilities might be on your side, but you're not, well, I mean, never say never 100% win rate over a very big portion of trades. I'm not talking about, you took 10 trades and you have 100% win rate. I'm talking about hundreds of trades with your strategy. It's very unlikely you have a 100% win rate. So you're always going to lose a trade somewhere. And it's no problem as long as you have solid risk management. Now, I personally always trade with 1% risk. And I'm kind of getting more into swing trading nowadays compared to day trading. But I trade with 1% risk. Now, someone might be 2%, 3%, 5%, 10% even. Depends on the person and the risk someone is willing to take. As long as one trade does not take out your complete account. And preferably, your risk management is calculated based on data. So if you risk 10% or 5% or 1% or whatever percent, if you know your win rate and your risk-reward ratio based on at least 100 trades, back-tested or forward-tested, you can calculate the risk management that will give you the most amount of profit for the next 100. And you will know if risking 20% is too much because you're going to be losing. You know that maybe 7% is the perfect risk for your strategy to get the most amount of gain versus the loss, of course. And if you only risk 1%, you're going to be missing out. Now, I know I might miss out on more profits, but it doesn't matter. You know, I prefer to have my psychology in a good flow, and if I risk more, I might get nervous. I might start to mess around with trades knowing I shouldn't. So psychology used to be back in the day, back in the day, my weakest thing. Now, I recommend everyone to work on trading psychology. Nowadays it's very good, but I therefore prefer to just stick with what I know and do. But you can calculate your best risk. So and if you have a losing trade, it's no problem as long as it fits your risk parameters. NZQE, I'm not really too interested in the local price action. I mean, the first move up here, the double, the 1-2, or the three-wave move to the upside. I mean, we can clearly count that as a three-wave structure. But honestly, this range here, I'm not interested in counting this. I did, of course, like from a little bit of a higher point of view. Are we looking for ABC or 1-2-1-2 continuation, or maybe we have a flat in here? But I'm not really interested in counting this in a lot of detail at the moment. We have the weekend range in here, which is always messy. We have clearly a three-wave structure to the upside here. Right, so, and let's actually see, did we hit the 886? We did not yet hit the 886, so there's still the potential for a double 1-2. But yeah, if you move a little bit lower, that's also low probability. So I just observe. I know what I'm looking for. I know how probabilities change as explained, and take it from there. But at the moment, price is moving down and volume is increasing. So I don't really have to know exactly what's happening. The only thing I look for now is how price is moving, and at the moment moving down on increasing volume. Lowers the probabilities. I'm interested, at least in longs. I need to see at least another couple of hours of ranging probably, or at least move above 69.9 or hit the target area that we have here, right? The fibs. See if anything happens there, yes or no, and if not, well, looking down, and if we do, then looking up. So take it step by step. Step by step. I do quickly go through chat to see what's been written, but I do have to go. It's already very late here. Where were we? Okay, never mind. It's fascinating how the waves develop and change over time. I agree. It's definitely part of Elliott waves. A potential triangle B wave since the Friday drop. There's no triangle in here. It's not expanding, it's not contracting. And if you look for only this to be a wave A, this whole move up, first of all, you need a zigzag, but then you still need a B, C, D, and E. So too early to talk about triangles in that case. But at the moment here, there's no triangle that fits the rules of a triangle. Samuel, what's up? But there is a possibility for the impulse to have started on the 10th of May. I know what you mean. I think. Yeah, so for me, there's very low probabilities this is the end here. Like, how do you count this as the end on high probabilities? So is there a possibility for the impulse to have started on the 10th of May? So if I then answer the question, very low probabilities. This is the end of your impulse. Right. So, or the end of your correction. So this is your whole correction. And then you need to think about zigzags, WXYs, flat. Well, clearly it can't be a zigzag because you finished over here. Can't be a flat as well because you finished over here. Can't be a triangle A, B, C, D, E or whatever, because we have the lows over here moving below this low, and only a wave B is allowed to take the high of A. So it can't be a triangle, which means you got to move into WXYs, which therefore means you're going to have a W here, a running flat here, and a wave Y. W flat, X running flat, so regular flat W, running flat in X, and then you have your wave Y being a zigzag. That works. From a theoretical standpoint, there's at least some probabilities. It's just low because a running flat is always a rare structure, never is preferred unless all of the other stuff fails. A running flat is the lowest probability flat. Highest probability is expanding, then regular, and then running. And if this is your W, right, then also your wave Y is very short compared to your wave W. It's not impossible, but it does affect the probabilities. Come on. Yeah, so where did it end? 0.236? No, even before the 0.236 fib time compared to W, so that would be my my only way to end it there, would be a WXY, but it's not great in probabilities. We can't at least forget about it, but in the end, it's all probabilities. Cheers, Andy. Sarah, how are you doing? Trying to strategize volume proceed order flow, and after 1 month, I can say I'm terrible. You're not terrible, crazy potato, man. If you, crazy potato, if you saw me trading after 1 month, man, you'd laugh. Right? You'd laugh. Even after I started to educate myself, I was absolutely rubbish. I was shit. I mean, I never blown an account, that's something. But I put all my savings, all my money was in my trading account, which is a very stupid thing to do. I was absolutely clueless. Now, for the sake of luck, I won my first trade and then lost all my gains, plus a little bit more, and then started learning. And risk management is one of the first things I started to learn, so that saved my account for the remainder of the year. It takes time. It takes time. Becoming a consistently profitable trader is the same as doing any study, for any profession. It takes time to learn. It takes time to get the tools right, to build a strategy, to get the mindset in the right place. It takes time. And of course, considering time, I do know your personal situation. So, with the amount of work, just working in general that you do, the hours you pull, it's not always easy to spend a lot of time in trading. So even more respect. But that also means that the time frame of 1 month and the amount of hours you have put in, don't focus on the 1 month. Focus on the 5 years. Focus on the 10 years. It's long term. It's a long term thing. We're not in this market for the very short term. Right? We're in this market for the long term. If you want to be a trader, at least. I was just asking because I'm in liquidation. So if I see move down, I will lower my level, and if we get down, I will just add to my position. 66.5 is your liquidation. How is that your liquidation? You must be trading with like 25x, 30x. I spoke about risk management. I spoke about risk management. Please think about your risk management, man. So if I see a move to the downside, I will lower my leverage. And if we get to the downside, I will just add to my position. Have a plan, have a strategy, trade the plan, trade the strat. However, whenever you at least calculate a position, or first of all, you should calculate your position size based on your risk. So if your risk is 1% and want to risk 1% of your portfolio, you go in 1x, no leverage, whole portfolio, right? Easy set. Or you use 2x, 50% portfolio, 4x, 25% portfolio. Now, of course, you can risk a lot more, and there's no problem risking more. But there's always the chance, the probabilities you have with your, or I should say this differently. Any trade, even though the probabilities are in your favor with your setup, your strategy, all the boxes are ticked. Everything it's beautiful. It's the most amazing setup. All the boxes are ticked. This is, according to your strategy, an amazing trade. It can still be a loser. And if you then risk too much because you're too confident, you're going to get your ass kicked. Someday, you're going to liquidate yourself. Like, easy. It's going to happen. Right? Because the most beautiful setups can still become losers. You don't know if your setup is going to be a winner or a loser. The only thing you can do is risk manage your trades. Don't focus on the profit. Focus on the loss. And that's your preparation. If I lose this trade, how much do I lose? Don't focus on how much do I win. The winning is a long-term plan, right? It's consistently profitable. That is going to be your long-term gain. It's not being a millionaire in one day, because very likely you're going to liquidate yourself, right? So it's about consistently profitable. Focus on your loss. Know how much you're willing to lose. Preferably know how much you can lose based on data. And then trade, right, with that in mind. If I enter this position, I am going to lose this if it hits my stop loss. My target is this, 1 to 3, 1 to 5, 1 to whatever. My profit will be that. Don't get greedy. Oh, I want more profit. So I'm going to increase my risk and I'm not going to care about the potential loss. And the problem is that if you do get greedy and someone does increase the risk a lot more than they should, and risk management goes out the window, if people then do win a trade, it teaches wrong habits, because they're going to be like, look, I know it, I know I was right, I know it happened, and they're going to repeat the behavior. And eventually that repetition is going to kill the account. Sooner or later, that one trade comes and it's not going to follow the plan. The only thing we can do is just risk manage. So if this is according to your plan, that's no problem. If your liquidation is based on your plan and you still have, for example, money in the bank, right? So you use leverage just to get to your total trading account. If your trading account is 100K, but on the exchange you only have 10K, right? Your risk for 1% of 100K is 1K. You can trade with 10x leverage with a 10K account to risk 1K. So eventually you might blow the 10K if you lose 10 trades in a row and liquidate the account, but your full trading portfolio is actually 90K, but the other 90K is still in the bank. So that, but this is risk management. So yeah. What's up, Andrew? How you doing? ABCD, that's a triangle, of course. ABC, yeah, there's the potential, yeah. Can you please explain CVD with examples? Well, first, of course, I have a template in Discord. Or template, I mean a one-pager. So if you haven't downloaded this, I recommend to download this one, because it literally shows you exactly how it works. Absorption. And then, of course, watch the video again. But in a nutshell, yeah, so it's pretty much what I always say. A bullish CVD means you're going to have a higher low in price, but a lower low on the CVD. In other words, more people are selling down here, right? Then I should do this on price. More people are selling at the higher low compared to the lower low. However, price did not make it below the lower low, even though more people are selling based on CVD, because CVD shows market orders. And if CVD is lower than the previous low, there's more people selling. So therefore, there's some absorption going on, which can be traded. Of course, use CVD in context with other tools. It's not like every CVD divergence is a trade. You know what I mean? Same with bearish. Lower high in price, higher high on the CVD, meaning more people are buying at the lower high. But we're not breaking the higher high, even though more people are selling because CVD makes a higher high. So there must be some absorption. Someone is absorbing market longs with limit short orders. And once the market orders get exhausted, the price turns around and we're going to look for price to move down. That is pretty much the theory in a nutshell. Probably banned words, I guess, yeah. Let's go, crazy potato. Never add to an underwater trade. It's good to have rules for yourself. Yeah, many of the alts don't look too great. I do agree with the alt charts there. You only risk what your stop allows. That's correct. Well, actually, not necessarily what your stop allows, what you allow, because your stop can be anywhere, right? Based on it, every trade is different. In my case, sometimes my stop is close, sometimes it's far, but I always risk 1% of my portfolio. So it's not the stop loss that decides the risk for your account. It's in the end what you want to risk. Your stop can be anywhere. You can have a stop loss at 0.5% as well as 2%, and in both cases you can risk 10% of your account or 1% of your account. It just depends on your position size and your leverage. But if you risk 1% per trade, then you don't have 99 attempts because your 1% is going to go down as your account goes down. So if you would lose in an imaginary world, you're going to lose every trade. Then after 10 trades, right? Imagine you have 100K in your account and you lose 10 times 1%. You don't have 90K. You're going to have 90.8 or 90.7 or 90.5K. Because the 1% gets smaller and smaller because your 1% of 100K is 1K. However, 1% of 99.9K is 990. You know what I mean? And then 1% of 95K, you get there. So it's 950. So you'll have more attempts before you blow an account. And also, I can suggest you to look at the chart of coin. This is the Coinbase chart, or you mean the asset? They chopped up so many traders. Yeah, if the lower time frames are not very clear from an Elliott Wave point of view, I got no interest if it's not clear. Like sometimes I can trade a daily chart or a 4-hour chart and it's more of a swing trade. And even though locally it's a mess, if the probabilities on different time frames are geared towards, up or down, I can trade potentially, if I see what I want to see, I can trade that, while on the 15 or the 5 or 30 minute can be very messy. People often read CVD like RSI. Yeah, they do. And they think CVD are hidden divergences, but it's not. So it takes a little bit of time to get used to. And it's good, crazy potato, building statistics. It's so gonna help you, man. Is there a bullish CVD from 69.2? Yes. I checked that during the analysis. Icons, is it possible to get the bottom of a long-term bear market with Elliott Waves? Yes, but at the moment the target I have is between 100 and 180 on the monthly. Of course, we will get more accurate as price goes along. Maybe it goes higher. I would expect to hit 100K actually, but we'll see if we do and if we go higher or not. But 100 to 180K looks plausible, and a potential bear market based on the previous bear markets could easily retrace to a 60-50K. I know we're talking about the bear market, but the bear market is related to the bull market, because the higher the bull market goes, the higher your bear market is going to have a target. So if your bull market goes to 500k, your bear market is going to have a, you know, like 100 or 200k low. You know what I mean? So your bear market is related to the bull market. The higher the bull market, the higher the price of the bear market. So if your target for the bull market is 100 to 180, then the target for your bear market on average will probably be around 50, 60. You could retest the previous all-time high at, let's say, like 65, 69k, you know. Coinbase and Nasdaq. Ah, I see. Yeah, I'm not really into stocks though. I have a question regarding CVD. On your explanation, you only show higher high on price and lower low on CVD. Yes, but what if price has lower lows and higher high? Then it's irrelevant. So we can only really use absorption. So in this document, exhaustion, let's see, what did you write? Lower low, and what if price has lower lows and higher high on CVD? Wait, lower low but higher high. Yeah, that's not a divergence. If you have a lower low on CVD, no, if price has a lower low, yeah, it's not a. If price has a lower low, okay, and CVD a higher high, you don't use CVD like that. So CVD is used lows of price with the lows in CVD, or the highs of price with the highs of CVD. So you can't. I mean, probably there is a way to use it, but it is not CVD absorption nor exhaustion. So then it's someone's own strategy that then has to be fully tested based on data. But it is not something that is either absorption or exhaustion with CVD. And besides, absorption is the recommended tradable CVD, and exhaustion has a lot of, it's not recommended. It's generally a lot of fake outs. So good question, but it's not something that that's used unless you build your own data and make it completely your own. Yeah, you do use the wicks of candles. Yeah. So it would be interesting to collect data and see if it works, but with how CVD is used, and yeah, it's not really something we use. But it doesn't mean it can't work. But then you need, it will be your complete. You're gonna own it. It's gonna be the C-Bell strategy. Okay, everyone, it's time for me to go to my wife and also have some dinner, because oh boy, I have been so busy trying to fix internet and calling with service and doing like lots of different stuff today. I just wanted to go live for all of you because I couldn't this afternoon because of internet. So hopefully you enjoyed the live stream, being here. Thanks for being here. Tomorrow is another live stream. Hopefully internet is going to work like it usually does, but this afternoon it didn't really. So tomorrow will be another live stream. And of course, tomorrow morning is going to be a update. You know the probabilities of the different time frames. So I'm going to put the timestamp in this live stream, in the VOD, after I stop the live stream. I'm going to put the timestamps in of the introduction, Elliott Wave analysis, the start, and then the start of the chatting and Q&A. So yeah, that being said, everyone, have a good one. Thanks for all the messages coming in. Enjoy your quality time with the wifey. Yeah, we will. So yeah, thanks everyone. So Greenable, I can take many trades if the chart is very clear. But Greenable, have a look in the Koens Trades channel in Discord, and you see some of the previous weeks with all the trades on there. So cheers everyone, have a good one, and I'm gonna catch you at the next one.